Hey, folks, welcome to InTheMoneyStocks.com's daily analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, everybody, into the action we go today on this Monday, February 7th, 2022. Markets again chopping all around, basically around the flat line. Volume definitely getting a little bit lighter than what we saw in recent weeks. Now, again, is this just a pause in the middle of a storm? Yes. That's what I'm assuming it is. I do think, again, like we talked about last week, you will see further downside. You will see new lows on the market. And again, that comes from the hypothesis that that upward sloping channel that I'll show you on the daily chart of the spiders that I've shown in each video, that has been broken now. So that is a big break. I mean, I think that, you don't hear the media talking about that, but to me, on a technical basis, that's a big deal. All right, today here's the intraday 10-minute chart on the spiders, and you can basically see we opened choppy. We went up a little bit. We were in the green. We then sold off in the red, came down to this trend line. If I zoom out, you can see here that the trend line actually goes quite a ways back. So this trend line connecting this pivot to that pivot gives you this low here from today and this one where we're currently sitting. So the market, you could argue, is kind of being pushed into a little bit of a wedge pattern, flat top right here from last week, and then an upsloping trend line here. Okay, so we'll watch that to see. We also have a gap fill up here. Eventually, that gap is going to be filled. I wouldn't be surprised if it gets filled this week. So again, even though my macro, my longer-term view is down, it's hard to know if the markets are have topped out yet. And I'll show you the daily chart and why I think that. So let's go into that, in fact, right now, get right into that daily chart here. And basically, here's your daily chart of the spiders. And what's so tricky about the spiders is that ultimately the downside's going to come through, right? So that's not a question. If you zoom out on the chart going back a long time, this was your longer term trend. This was your trend on steroids. And ultimately, we're going to come back in this range at some point. Now, if you go and zoom in, the question is, are we still going to go up and tag this area right here, right? So are we going to still get up one more push, try to at least retrace to what we would call the scene of the crime before that rollover? To me, that's the maximum. If you remember last week, I was talking about how I would like to short the market if it gets up to that area there, as again, that would be major resistance. Now, again, what am I looking for here? So I'm just kind of letting the market do its thing, right? We have some shorts out there. We got some longs. Ultimately, I pared back some of my longs today. You guys saw we took more profits today. Mara, amazing 17.68% gain. FSLY, 8.22%. And NET, just around 11% gain. So definitely smart to kind of pare back a little bit on the longs because, again, if you look at the upside potential, there's not a ton of upside here. Now, granted, you do have some of these tech names like NET that have just been beaten down so hard that they still could have a little bit more upside. But overall, again, you want to pare back, reduce risk exposure to the upside, considering we've had such a big bounce off the lows. I mean, if you look at the spiders, right, here was a basically 420, and we hit a high last week of 458, 457 right here. I mean, that's a huge percentage move. Now we've backed off a little bit, but again, still you have to respect the move and that it could and will run out of steam at some point. All right, so again, still doesn't mean I'm going to sell all of my longs and take profits, but I still think that, again, the ones we have out there are in good shape. I still think something like a PayPal, a Facebook, they've been beaten down so much that those are ones where you should see some sort of technical bounce coming in the not-too-distant future. SE, another one, that's actually trading up today. That looks reasonable. Teladoc, TDOC, fractionally higher today as well. So again, I think there's places to be still long in the market, but pairing risk on those long positions by taking some off the table is the right move. Okay, so we're going to continue to follow here what we do. Ultimately, where do I think this market will go? Let me go and show you guys that here. And basically, if you zoom out on the chart now, again, first target, you have to think. Now, listen, there's going to be some bounces along the way, but after this initial fall, I think the next one takes us down right into this level here. This will be your next area of support, this longer term up top trend line, right? So that right now is around 388 or so. My guess is by the time the market gets down there, it'll be above 390, maybe even close to 400. And again, that'll be interesting to see. And the reason why it could be as close as 400 is because if you just go back 1 month, this was below 380. 2 months, it was down around 370, right? So if it takes us, let's say, 2 months to get down to this line, in 2 months' time, this absolutely would be close to 400. Then you have that kind of even number effect, the pierce of the even number that could give you a bounce as well. That'll be where I start to really load up on longs again for a technical bounce. Eventually, do I think it trades inside of this longer-term range? Yeah, I do. In fact, I think I've gone on record in saying that this area here at 340 is your likely right now it's your midpoint, but it makes a lot of sense that you would see the market come back to the pre-COVID highs, right? It's kind of like a full circle. In fact, we've seen a lot of stocks doing that. Speaking of which, I'm looking to add to my Facebook position at that very spot. So what do I mean by that? Well, very clearly here, you have this pivot top, which was pre-COVID, right? So here was your highest point pre-COVID. Here was your dip initially, and then here's your run during COVID. And remember, during COVID, Facebook saw so many extra people on the platform. And now as things have opened up more and more, people are out and about. They're doing other things. So you're seeing Facebook suffer. Now, the price, again, has gotten very, very close to that. Didn't quite tag it yet. But again, that would be where you would expect it to go to, where it should have some major support. So you can see a lot of these stocks are doing those round trips going back to those pre-COVID levels. So it only makes sense to me that the market should likely do that as well. All right. Looking at the QQQ chart here, let's take a look at the NASDAQ 100. This is kind of a pretty crazy chart that I have up. Initially, I had this dotted line as the main channel, and we know we broke down through that. But again, I think it's fascinating that if you connect these highs, right, and then the midpoints line with these lows, and then the lows, the low from COVID, the March 2020 low, and the low here match up perfectly. I mean, it's just remarkable to see how the charts there's so much symmetry in them, if you will, right? So again, when I zoom in here, the question I have is, do we still have upside maybe back to this dotted line, or are we already rolling over? And again, we are seeing the Q's down about $2.45 today. Granted, it's only 0.7%, but the question again is, are we already starting to roll over and head back down here? And eventually, like I said, just like with the spiders, that should break, right? So again, if you look at your longer term, and I can just draw some general longer term trend lines on this chart, right? So if we go like that, and you kind of connect this area here going back to 2015, and then the highs from 2018 here, and then right here as well. So that would be your first kind of longer term retrace down to here, which would get you down to kind of your natural trend that the NASDAQ was going on. And then, by the way, that natural trend would just be if the Fed kind of stops QE and raises interest rates a little bit. That should be what happens. Now, if the Fed creates a recession or a very hard landing, that's where you get the other scenario, right, where you could be looking at, and again, I'll try to do this as accurately as possible here, but, we could be looking at, let me see if I can do that a little bit more accurately here, where we go down to something like this, which is a parallel line, right? So this would be your longer term kind of channel here, just like the spiders, and then the question again would be is that where you go to eventually? Now, interestingly enough, the pre-COVID high is actually right here in the upper ranges. So we know that tech obviously had a much bigger move up, but this would absolutely be a huge accumulation zone. And by the way, there'll be bounces along the way. I see a huge support at 300 on the QQQ. That would probably be my next buying opportunity for a quick swing trade bounce on a lot of these names. And then ultimately here at 260. I mean, there's a bunch of levels on the way down. There's even one right here around 265, 270. But the bottom line is we're swing traders. Let's remember that. We're not marrying anything. We are positioning ourselves per the charts. We're positioning ourselves sometimes for a bigger macro move versus a short-term, real quick move. But either way, there's keys behind it. There's metrics behind it. Overbought, oversold, technical analysis that back that up. And again, what this leads me to believe here is, again, that you will likely see much, much more downside in the tech sector, along with the S&P. I mean, really, there's percentages may be slightly adjusted. I think the tech sector has more to fall because it went up much more sharply. But overall, both are going to see a lot of downside before it's said and done. I think by the end of the year, like I said, I think the S&P's at least corrected 20% off of those highs, and that implies the NASDAQ at 25, maybe even more percent off of its highs. And remember, the NASDAQ at one point was down, I think, 17% off of the highs. So, I mean, it's weirdly enough, it's not like, I mean, even going down 25 or 30% is not, it's like another 10%, give or take, on the Qs from the lows that we were already at, which is kind of scary, right? I mean, think about that. I mean, even 30% would only be another 13% lower than where the last low was. Okay? All right, quickly, let's take a look at the Russell here, the IWM. The Russell, again, actually having a pretty decent day. It is positive on the day, up about 0.7% off of its highs. You guys know I am still long TNA because I still think the Russell has upside right to this area right here. To me, it makes a lot of sense. This would be a retrace to, again, the scene of the crime, right? So if you look at all these lows and you draw them out and you got this pivot low here, 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 and here, this was a breakdown, right? So price broke down. So what generally happens? Price retraces back to what we call, again, the scene of the crime, and therefore that would be your upside potential, right around 210, 208, something in that vicinity, which actually is still about, $8, $9 higher, even maybe $10 higher than the current levels that we are at. All right, so again, I'm still remaining in the TNA. I still think it's got some more upside to it. Should be interesting to see if the tech sector starts to really roll over. But again, we are seeing, again, tech sector rolling today, and the Russell's holding its own just a little bit and eking out a little bit of a gain. Now, Bitcoin, to me, is the big story of the day, folks. This is a breakout I called last week that was on the verge, and it certainly has played out perfectly. In fact, I did take some profits off the table on my Bitcoin and verified investing crypto.com today. So again, I actually took Chainlink. I sold a bunch. Just knocking it out of the park there because, basically all crypto moves together. So if you're long a bunch of them going into a breakout, you're going to do very, very well. But you can see, again, classic flag pattern here. And this is what I was explaining to crypto members, is that a lot of people look at this and they're like, oh, that's a bear flag. But first of all, you're right. It is a bear flag. But you have to look at the macro picture, and this is where a seasoned eye on technicals is going to be a little bit more advanced, is that when you look at this bigger chart and you see that the high here to the low here, right, is the same distance from here to here, and the technical trend line is right there. That technical trend line is more powerful than this trend line, which has been hammered here, here, and here already multiple times. Think about that. It's a perfect parallel drop in size. So the idea is that you should, you'll see, just because of so many green candles, you see a little check back, and then it's going to break out. And that's exactly what happened. Now, what's interesting here is Bitcoin's getting to a point where it's actually getting overbought. In fact, I did short a little Ethereum today near the highs, and the answer here is very simple for why, right? So if you look at this chart, number one, you have resistance on Bitcoin. So we have this trend line right here at 46. To me, that's my max upside. And I sold half of my position on Bitcoin, so I'm holding some of it just in case we get up to about 45, 46,000. Although it is pulling back just a tad off of this level here, which was resistance. If you look at this trend line right there, that pivot to that pivot. But more importantly, I want to show you this next trend line here, which is zooming it out, right? So remember the head and shoulders on this, and you saw this beautiful head and shoulders right here, right? So just a classic head and shoulder pattern, and then the breakdown. Well, if you take this low here and just draw a straight line through, all right, you can see very clearly pivot low, pivot low, pivot low, and then it actually retraced initially right there, but it makes a lot of sense that would be kind of your upside as well, which interestingly enough is very close to that 46,000 as well. So 45 to 46 seems to be where this wants to go. I don't know if it'll get there on a straight shot. It might pull back for a few days, but again, that would be kind of my maximum. Now, again, I'll quickly show you the idea behind the Ethereum short that I took, that I put out in Verified Investing Crypto, ETH US dollar here. It's basically this classic chart here. In fact, we're in the money a little bit on it already. You can see pivot here, pivot here, pivot here, and then look at price right into that level right there. It makes sense it would pull back just a little bit. My expectation is see this little pivot high right here, probably check back to like 2,800, 28 and a quarter, 27.75, somewhere in that vicinity. you'd likely see a pullback too. All right, let's take a look at gold, the gold chart here. Gold is having an awesome day today. Beautiful move up, 14 bucks up on the GLD or the gold spot gold, excuse me, on spot gold. A beautiful move of almost $14. And again, all we care about is this wedge pattern. That's the short term. And then what we care about next is this longer term move, which is this is all bullish inside bar in the top area of that pattern. And then if you want to even get more technical, go back to the 70s and you'll see exactly the same formations. What do I mean by that? Well, from 73 to 75, you had a move up like this. And then from 75 to 77, you had a move like this. And then in 78 to early 80s, you went up about, 300-400% or more. I mean, it was a ridiculous move. I'm not going to be the crazy person that's saying gold 10,000, which would be kind of in that same line. But I do think, honestly, yeah, gold 3,000, at least this year, 2,600 or so, which would be a measured move. So, yeah, I mean, ultimately, do I think 5,000 on gold? Yeah, I think 5, maybe more. That makes a lot of sense considering the money printing. So anyways, just some things to consider there. Let's take a look at silver here, folks. Silver's also having a good day. As long as silver continues to hold this 21.75 area here, that's good. Silver still has to break to the upside, but the long-term pattern on silver is very, very pretty as well. And lastly, let's take a look at WTI crude here. And if we go to WTI, you are getting a little pullback, right? So remember, I added to my SEO on Friday based on this chart right here. Beautiful chart here. And again, the idea here for me is that you should get a significant pullback off of here. And the reason you should is because, again, just look at this megaphone pattern. And again, you see how it's kind of like a megaphone, how the lines go away, go further and further apart. But you see a pullback here, and then a bigger pullback, and then really what should happen is you should get the biggest pullback here to this lower level. All right, and that, again, you can see the perfect kind of way this chart has played out. Now, listen, nothing's perfect, not necessarily going to work out perfectly down to that level, but it makes a lot of sense that you could see a pullback, which is pretty remarkable, right? From 92, 93 high, today 91.50, all the way back to sub $70. It would be a pretty remarkable collapse in oil should it happen. So, again, that's the charts. Will I be right? Well, most of the time I am. Not every single time. We have to remember that probabilities are probabilities. They tell you the likely scenario. They don't tell you the definitive outcome. But I continue to like the short here. I think this is a no-brainer to me. So, all right, have a wonderful rest of your day, folks. Take care. I will talk to you very, very soon. Take care.